The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 12th wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. We're doing to make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to give us a call. You can right now, 877-927-6648. If you can't get to the phone and you can send an email, do it at steve@tfnn.com. Inside that heading, put radio show question. I'll be happy to get to your request. And inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 117 points at 21,525. S&P is up 0.7% or 17 points. NDX 100 up a little over 1%, 59 points. 57.68 is what she is printing. Russell 2000 up 11 points, trading at 14.25. The semis are up 1 4/10% out here. Green across the board. Gold is up $4. Silver's up 13 pennies. Light sweet crude up 78 cents. Natural gas pulling back just a tad out here. Bonds are up. Leading the charge here to the upside, you got Priceline up 15. Google's up 13. Amazon is up 11. Coherent Inc. up 10 and change. Mercado Libre up 10. Intuitive Surgical up $9. To the downside, it is MSC INDL Direct, whatever that might mean, Industrial Direct. It's off 12.50 or 14%. Granger Worldwide down 3% or $5 and change. John Deere off about $4. Chipotle down 2 and change out there. We can take a look at those or anything that you would like to look at. And the first anything you'd like to look at, that would be for Tammy in Reno. She has asked the question, where's oil going short term today? Oh, boy. Well, let's go see if we can figure that out for you, Tammy. So let's go take a look at the light sweet crude, the September contract out here. Is it September? Let me see what we've got out here. Light sweet crude. It is August. What am I talking about? So as we take a look at the August contract out here for light sweet crude, let this populate. And since the request has been short term, where is it going? Let's go take a look at what we know right now. Interestingly enough, when this thing, light sweet crude here, made this little TD combo count, I had about 10:30 this morning in a big, and I do mean big old bearish engulfing candle that formed there. But price right now is taking on Stevie's red line. Let me go ahead and get rid of the little rainbow area. Let me just go ahead and get rid of that. So that'll take just a second to do. And here's what I would suggest that you pay attention to. The 45.87 area where it's trading at right now, it's right up against Stevie's red line. If price is able to close above that in the next 30 minutes, that's going to provide you and I with some good information out here, Tammy. So 45.97. Well, oh, it is the September contract versus August. I take that back. Yeah. Now I thought I put that in here, but I don't see 917. That's a bummer. Well, so that means that I can't change that right now. It'll take too much time during the live show. Let me put up the continuous contract. We ought to get the same data. So give me a second here. Boy, I want to give you the, am I getting it? 50, 45, 84. What do we trade at? We're not. 45.99. No, this is a bummer. You know, because I want to give you accurate information. The red line in here should really be the level that you're watching. The reason why I say that, Tammy, is because if you look at the bottom portion of my screen, that's the price oscillator. That's a 30-minute chart, by the way, that we're looking at. Difference between the 19 and 39 period exponential moving averages, and closing above that red line says you have a rising price oscillator above zero. So right now, let's go with that. Let's go over to this set of charts out here and take a look at our profiles. We're going to do this with the Stevie synthetic contract out here. This will be helpful as well. And so on the 60-minute, I'm going to switch this to a 30-minute time frame real quickly. You're looking at the left-hand panel out here. So the answer to your question is 46.21. The question is, where is price headed to? I would say 46.21. If price is able to take out that level, then you're looking at 46.84. The area that would negate that move would be a close below 45.66. That's a brand new profile that formed here just within the last hour. So that's what I would be watching for, Tammy. I hope that helps you out. I'll make sure that we have the September contract in my other system by mañana out here. Now, the question is, hey, what has changed since you and I were together last Thursday? Yeah, Thursday was the last time that you and I were together out there, and it's good to be back with you again. And what are we going to be watching for today? Well, what is the message of the markets as of 1:12 in the afternoon? Well, I am glad that you asked that question. Let's simply start off by taking a look at the daily equity contracts out of the cash contracts for the S&P 500, the Dow Jones, the NDX, and the Russell 2000. Basically, the four traded vehicles that most of you would use from an indexing standpoint. You may use some derivative of this, a double, a triple, a quadruple, a triple Lindy, or something like that. But in any event, this is the single out here, and you can see that right now as we speak, that price is above Stevie's red line in each of these indices out there. Now, you tell me, is that bullish or bearish? Exactly. That is a bullish signal. Each of these have rising price oscillators above zero, and there is nothing more bullish than a rising price oscillator above zero. Now, it's going to be about today's close. So inside the S&P 500, well, that would mean I have to change my charts out here. Yeah, that's the only way I'm going to be able to give you the numbers. And I ought to just give you the numbers. Don't you agree? So give me a second here. Let me go change workspaces, and we'll go take a look at the S&P 500. We'll pull that up first. And this is what you'll be watching for. You're going to watch for a close above Stevie's red line. That's 24.3661. If price closes above that, the S&P 500 is not just going to go test its highs. It's going to go take out its highs and probably form an A to B equals CD to the upside. You might say, well, Steve-O, where would that take us to in the S&P 500? That is a question that is relatively easy to answer if, in fact, this tool will work for me. There we go. So our oh, man, what's the deal out here? I guess while the cat is away, the mice will play, and my mouse has been playing. 2506. 2506 becomes its target inside of the S&P 500. You're only at 2442 right now. It probably would go higher than 2506. But as we speak, at 1:14 in the afternoon, you don't want to be short the S&P 500. It's just that simple. Steve Rhodes with TFNN. Right. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So the number in the Dow you're going to be watching for today, Stevie's red line number 21,496.66. Don't worry about the pennies out there. If you close above 21,496, and by the way, we've made a new all-time high today. What you and I know is that bear markets do not perform retests of highs when you take a look at a daily chart. When a bear market starts, it never lets you out. It makes the high, and then it is sayonara, adios, see you later. And what we have seen occurring here, you and I, we talked about this last week, the week before, that what we saw here was nothing more than a bunch of testing of the highs. And therefore, what you and I knew is that all those that were calling for this to be a major top were not reading it properly. Because you can go back to every major top and you will not see a retesting. You will see it ring the bell, and that's it. That is why the Dow is back up at its highs. Because what it's really doing, it's just building cause, right, so to speak, to continue to move higher. Now, you might say, move higher to where, Steve-O? And that's an excellent question. And what we would do is just simply go take a look at our horizontal trading ranges. So let's go do that. This is here is the chart for the Dow. Now, that doesn't mean that there's not a thunderstorm cloud ahead, and you don't want to get caught in a lightning storm. And that lightning bolt might hit right around 21,639 as you're watching us on Tiger TV. You see, those are the red horizontal. Those are the monthly trading range levels. Excellent support at the weekly trading range area of 20,704. We can see that that was a test on a weekly basis back here the week that began May 15, 2017. And if price gets above 21,639, yes, it will. Then where price is going to head to inside the Dow is the 22,700 area. 22,726 would then be the next stopping point on this choo-choo train to higher price. And then you'd be looking at 23,517. So a key area to be watching is the 21,639. Here's what we know. Unless there's going to be a bell ringing out there, which means we're not going to see on daily charts retesting of highs out here, the Dow wants to move higher. and that price level is 21,639 that it needs to overcome, and it will overcome. And when it does overcome, 22,726 becomes the next level. Now, you might be saying, how in whatever it is you might be then saying with regard to those adjectives out there, can you come up with this? Well, you've been away, but well, here's one of the things that we know. Right? You also know, right? You taught me this. You taught me that when the New York Stock Exchange advanced decline line is at new all-time highs, there is never, ever, 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 you told me, never, ever has there been the beginning of a bear market. Well, then let's go check that out. Where are we in the advanced decline line? Well, my number on my screen is going to read differently than yours for those of you that track it at home. My number says 406,835. That is above the all-time high from July 3rd. That was at 406,356. So in essence today, even though the New York Stock Exchange in price is not at new all-time highs, the New York Stock Exchange advanced decline line is. And folks, that just simply has one definition: bullish, not bearish. That is just simply the meaning. Now, you don't have to believe me. You can go back to your advanced decline line data, and you can go back and you can take a look at other highs out here, and you will see it just doesn't happen. You need to see some type of divergence. You need to see price moving higher with the advanced decline line making a lower high. Do we have that right now? The answer is no, we do not. With regard to other, right, we took a look at the 4 other levels or indices, cash indices out here, the NDX 100. The level here is 5713. That's what you would need to see a close below in order for the NDX 100 to give you something other than a bullish message. Otherwise, what the NDX 100 is doing is headed back for its highs, and it's headed way beyond its highs out there. When it takes out that 7th wave, level number G on our chart, it's going to just simply scream to the upside. And where is that upside? I don't know. Let's go take a look at the horizontal trading range levels out here, see if we can find them. I know they are somewhere on this screen out here. I guess we just need to go a little bit further here to the right. And this will take a look at those 3 different time frames. You can see right now the monthly chart. That's the one that's on the left. That has an A to B equals CD. That's going to take price up to 74.62. Yeah, you heard it right. 74.6250, probably higher than that, but that becomes the A to B equals CD target. Right now, price is sitting right at the resistance level of 57.69. We're trading at 57.65. That is the red line, so to speak. That is the monthly horizontal trading range. So if you are watching this on TigerTV, you're looking at a monthly chart, you're looking at these horizontal levels out there. They can act as resistance. They give us excellent guidelines as to where price is targeting. We can see that the red dash line, by the way, at 1576, that has the largest number of opens or closes on a monthly basis. And in fact, it is that line, and then either it's the one below it or the one above it at 867.53. It's probably 860. Nah, it's probably the one above it at 2267.99 that give us our mathematics to figure out what these levels are. And you can see that that is where the 2000 and a high found resistance. Nice little bearish candle that formed out there. Do we have that in play right now? No, we do not have that in play. So watch for the NDX 100. You know the lower level that is support, Stevie's red line. As long as price stays above that, the message is it's going higher. And as soon as price closes over 57.69, let's really call it, when we looked at that daily chart, the actual all-time high inside the NDX 100. That is when you will know. You'll know and I know, and Dave Mason will know, that price is going to head to the next level. And that next level is going to be 64.69, then 71.69, then that 74.62 when it gets up to that A to B equals CD level. Inside the weekly chart of the green lines out here, well, found support, or it found support, the NDX last week, down at the 55.75 area. So support has been tested. You can't bust them down. What are you going to do? You're going to go bust them to the upside. That says 59.18. That's already etched in stone out there. It's on the plaque. The NDX 100 headed to 59.18. That is on the weekly chart out here. In the daily chart, all you need to really see is a move about 57.67. Again, we're at 57.66 as we speak right now. So the daily, the blue lines on the chart, and the red lines, the monthly, show that we're at this little agitated area. So does it have to happen today? No, it does not. But is it going to happen? Absolutely. And how do you know that? Well, the one thing you know, the advanced decline line is at new all-time highs. And folks, bear markets just simply do not start when that is what you and I are looking at. If we go take a look at it on a short-term basis, that means daily out here, and we go take a look at those advanced decline oscillator readings, the New York Stock Exchange is on the left. That is above zero. Take a look at the NASDAQ Composite. That is above zero. That was the second chart. Take a look at the Dow. That is above zero. And when we take a look at the S&P 500, the ultimate right-hand panel of my screen out here, the very bottom is the spot volatility index trading at 1035, back below that 50-day exponential moving average of 1102. The VIX index headed to 972 or lower. That's just going to give a nice big oomph move to the upside in the S&P. All-time highs, folks. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we've got a couple emails that have come in here. Let's go ahead and get to those. This is from Tom. Tom, nice to hear from you. Long J Nugget trading that off of the GDXJ. What are your thoughts about keeping it for a short while and taking profits? No, I don't like the idea of taking profits. Or at least I don't think I do. But let's go confirm that here as of 1:30. And as of 1:30, one of the things that you and I are going to look, well, we're going to look at a couple different things out here. One thing, and I don't know, maybe this is already coming by email as well. Let's take a look at what's going on inside the Japanese yen. Now, for those of you that might be a new listener, you're going to say, well, Tom asked about the miners. He didn't ask about the Japanese yen. That is true. But here's what you know and I know. And if we go take a look at the 10-minute chart out here, for gold, that's the top portion. For bonds, that is the center portion. In this case here, for yen futures versus the currency pair, what we know is there is a direct correlation. Why? I don't know. I just know that it's there, and you pay attention to it, and you can use this as one of the factors entering into your decision-making about where gold bonds are headed to, because if you're asking which one's the dog, which one's the tail, it is gold that is the tail. It is bonds that are the tail of two stories, but it is the yen that is the dog. In this case here, this thing is giving us a nice reversal signal, and that occurred yesterday afternoon. It was confirmed by the close. And that signal out here, now we're switching back to the currency pair. So we're looking at the yen US dollar. We can take a look at as price got up to a resistance zone set up by a previous swing point along with a bearish reversal stick out here, reversal candle. We had the exact same thing take place yesterday. You had a nice little key reversal. So we're seeing a pullback out here. So that says, Tom, to you and I, that, hey, this could be a significant type of top. Until that high gets taken out in the yen, this would suggest that, or encourage you to consider staying long. Now, you're trading off of the GDXJ. So let's go take a look at GDXJ. Let's go ahead and put that up on our symbol. This is the Junior Miners ETF, and I just don't know if this gave the same message as the GDX yesterday, but we're going to find out. And it was May 4th, and it really didn't. So what I mean by that is price never, this could be bullish. You could consider this to be bullish, Tom. Is price never made it back to the May 4th swing point. There were 30 million shares out there. And as price was pulling back on July 7th, there was 17 million shares. Nice bullish engulfing on July 10th, 14.8 million shares out here. So price was pulling back on lighter volume. Now let's go ahead and add some profiles out here since you're trading off of this ETF specifically. And we'll go ahead and we'll put the daily profiles out here. So a brand new daily profile today. I still say hold it. And what you'd like to see is price close above today's top of the box. By the way, speaking of profiles out here, I heard rumor that John Logan is giving a workshop tonight. And not only is he providing you with a workshop, he's providing you with this set of tools for free for anybody, even if you had been a subscriber to his products before. That means every single one of us needs to sign up. If you haven't signed up, then do it now. Then turn off the volume, turn off my show, go simply sign up, and then go ahead and turn the show back on, because you should attend. You use them each and every day. I use them each and every day. I would be lost. They are my seeing eye dog out here. They're now your seeing eye dog. And so, Tom, we want to see it close about 32.65. Does it have to happen today? No, it does not have to happen today. But it likely is going to see a move above that level and then move up to about the 34.57 area, all the way back up to its recent highs, the swing point from June 14th. That is what I see when I take a look at the GDXJ. And the reason that I see that, Tom, is because of what I see inside the GDX. So that combined with what you and I just looked at inside the yen gives you reason to say, yeah, you ought to go ahead and hold on to it longer. Now, May 4th here, the GDXJ actually stronger than the GDX itself, because May 4th is a swing point that was tested. That had volume of about 70.5 million shares. It was tested with 57. It was tested with 52. It was tested yesterday with 35. That was a test and rejection of the top of that swing point. We can also see inside the GDX, it too has formed a new market profile. Now, support inside the GDX, if it were to pull back, would be at 21.35 to 21.47. If, in fact, this closes above 21.96, that will be a very bullish message. And says you're going to go head back to the 23 to 25 area. So, Tom, good to hear from you. I hope that assists you in your short-term trading out there. Now, let's go take a look at what was the next request that came in. That was Mike. Both CL and GC are on the August. Thanks. Okay, thank you for that info. That helps Tammy out when we're taking a look at light sweet crude. Mike wants to take a look at NVIDIA. Think we should hop aboard. So let's go take a look at NVIDIA. Yes, probably should have hopped on board 3 or 4 days ago. We take a look at NVIDIA out here. Now, what NVIDIA was doing, really just a beautiful type of a setup out here. Let's take a look at it. And you're going to take a look at this little orange box out here, this orange yellow box, really. That was a consolidation. Here's a consolidation. Price goes ahead, and you have a move equal to or greater than the consolidation. Price pulled back into the top of that area out here. But what we really want to look at are these profiles, right? Profiles encourage. Again, what you want to do now, do you hop on board? The answer to that question, Michael, is no. The reason why you're not going to hop on board right now is because price has moved up to a potential resistance level, the top of the weekly box. If it had cleared the top of the box, 161.88, and it were also doing it with more than 92 million shares, then the answer could be, yeah, maybe. Instead, what you want to do is take a look at buying this on a pullback or a breakout. We just don't have either of those as we speak right now. But the pullback, boy, take a look at that center of control. That was a beautiful area for a potential buy. And then there was a brand new daily box that formed, albeit on July 10th out here. And so this is the area where you'd be looking to buy some type of retracement. Now, that retracement may only be 151.94. Ideally, it'd be somewhere between the 142 to the 145 area. Volume, by the way, today, 19 million shares. Does it have to take out this high, the high being June 9th, and do it with more than 92 million shares? Nah, not really. That was a day that'll live in infamy. No, that'll be the day when you say goodbye. Oh, no, that was the day when we know that there was a fund that was just simply liquidating because of redemption that had there. So there was a lot of forced selling that was going on, and therefore I'm going to say, nah, it doesn't really need to take out that. Now, I'm not going to remember that years from now. It just so happened that on that day, you and I, we were watching, we said, hey, look at what this trading desk is doing inside of NVIDIA. They started with NVIDIA, and then they just kept on going down the line out there, and then it was the next day or the day after when we found out, I forget the name of the company, that they just simply had to liquidate $8 billion in positions. And I'm sure they didn't really want to liquidate all of these. So, Michael, I say the answer is no. Buy this on a pullback, but it does want to continue to move higher. That is on ticker symbol NBDA. Looks like we've gotten everything out there. So that says in the next 30 seconds, we're going to go to commercial in about 4 or 5. We'll come back. We'll go back to the markets out here. We'll try to figure out where they are headed to. We have sort of given you that information, right? They're headed higher. They're headed much higher for much longer periods of time to come. What you want to do is you want to be like Michael here. He's trying to figure out how to buy this market, not sell it. Buy it. Buy, buy, buy. That's the B-U-Y. We'll be right back.
Will interest rates continue to rise? For bold trades on U.S. Treasuries, now may be time to take a closer look. Trade TMF or TMV, Directions Daily 20-plus year bull and bear 3 times ETFs, direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. John Logan has been hard at work making the TAS Profile Scanner Plus the best it can be, and he'll be hosting a special hour-long webinar for all TAS Profile Scanner Plus subscribers this Wednesday, July 12th from 5 till 6 p.m. Eastern. Right now, you can get a 30-day free trial to this amazing piece of software. See for yourself how it tracks 5,000 financial instruments in real time, over 17 different stock exchanges, U.S. futures, and currencies. This piece of software will change the way you trade, and it can be used with any trading methodology. The combination of price and volume is what makes market profile-based analysis so unique. We've opened up a 30-day free trial to the TAS Profile Scanner Plus, even if you've had a trial before, so now is a great time to sign up. You also gain access to John's July 12th webinar, How Price, Volume, and Time Make Market Profile Unique. Sign up for your free trial to the TAS Profile Scanner Plus right now on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So right now we've got the Dow's up 127, S&P is up 18 points. I don't see any other emails out here. So let's go figure out what haven't I shared with you thus far. Not on purpose, not intentionally out here, but we've taken a look at, in essence, we've taken a look at gold, right? We looked at the miners. Let's just go take a look at gold. And let's come back here. Let's put this on Stevie's synthetic contract. I just simply like the profiles that show up here better, especially as we get towards daily and weekly. And here's what we see. We see that gold is off of its highs from earlier this morning, 9:30, when we saw a nice move up to about 12.24. Price is just coming back and testing out a support area of the 30-minute profile. I'm going to change this to 60-minute, though, and try to just keep this consistent, 62.40 daily and weekly out here. So gold could still pull back to 12.16, and there would be nothing wrong. More likely than not, what we're going to see here is an exploration of the anywhere between where we're trading now, 12.16, all the way up to the 12.23 level. This box that formed here during the last hour has a bullish structure. So it is important for gold to go ahead and hold the 12.16 level. Now, in the 240-minute chart, we can also see that the 12-1850 area is the top of its 240-minute chart. So staying above that would also be a nice little bullish message out there. And then that would say any move above 12.2390, the 60-minute top of the box, is then going to go ahead and bring the 12.33 level into play. And that is the daily box that formed last week. So the levels to be watching, 12.16 for support. From a resistance standpoint, a move above 12.23. Should that happen, price is then going to go ahead and try to tag the 12.33 level. What happens if we close below 12.16? I don't know. But do you have to bring back the 12.11 to even the 12.06 area? And that's just simply going back and taking a look at the 240-minute chart out there. And that is for Goldilocks. If we go take a look at silver out here, trading out of 15.88, up 14 cents. Again, we're going to use Steve's thin synthetic contract. Really similar, right, to the gold-looking chart in that price is trading at its point of control, that being 15.88 out here. And on the 240-minute chart, the nice thing here is that we have a brand new box that formed back at 6 o'clock this morning. Now, that box formed above the prior box out here. So silver is saying, hey, this thing has found a bottom. And then if you look at the daily chart, brand new profile that formed, voila, today. How about that? How do you like them apples out there? And that says silver should find good support if there was a move back to 1532, and that silver is more likely than not really going to head to 1620. And you take out 1620, hey, then the sky is the limit. And the sky is where is the limit? 1775, 1772, somewhere in that range would be where you would be taking a look at where price would be headed to eventually next out there. So I would also have to say, hey, Tom, these are more reasons to consider hanging on to the trade. But you trade from a short-term standpoint. Never anything wrong with taking profits and then buy on the next retracement. That's our take on Goldilocks and silver and light sweet crude. So let's take a look at some individual equities out here, right? Let's go do that. But if we're going to do that, let me make sure that that's what I want to do. Right, I'm looking. We haven't been together for a while, and so I just need to take a quick peek at some other charts to see is there something. Oh, this. Well, we talk. Mike was asking about NVIDIA, the semiconductors out here. Here's the monthly chart for NVIDIA. You and we looked at this before, right? And we looked at it and said, hey, is there anything really bearish about this chart for the semi? Now we're looking at a monthly chart, right? The monthly charts are very helpful, very instructive for both you and I, because this is going to give you and I the better, larger, bigger picture out here. And yeah, there was one of those dark cloud covers. That's like if you live in Florida, you turn on the weather. Quite frankly, it was like when I was in Washington, D.C. I didn't find their weather forecasters to be much better than the weather forecasters here in Florida. But basically, you turn on the tube and they say, there's a chance of rain. There was more than a chance of rain, but in any event out here, that's what really a dark cloud cover type candle is. Right out of the top 5 double candle formations out there, it's not the weakest, it's the second weakest of them all out there from a reversal standpoint. Look, you still have to use it as resistance, the top out there, but we know that support is Stevie's red line. That's right now printed at 1009.38 out here. The semis are headed higher. It is really just that simple out there. Now, as long as we're on this monthly chart out here, we might as well take a look at let's look at the NDX. Let's go take a look at it. Let's take a look and see what it shows out here. Where's price trading above Stevie's red line? You'll see the red little squares out there. You'll see some red squares and green squares. The red squares out here, and I'm not really referring to Russia, even though that's a pretty cool red square. It is not the same as this red square. And just because you and I mentioned Russia means that now each of us are being tracked. We're being listened into by the NSA. Well, of course, we're always being listened to, regardless of what it is that we say. But in this case here, that red square tells you there is just huge momentum. Huge. Now, you probably didn't need me to tell you that, but the stock chart is communicating that to you. And when you see these red squares form, such as the one from 2 months ago inside of the NDX 100, you really just simply don't get too concerned. Your skirt doesn't get into a tizzy because of last month's dark cloud cover candle that's out here. So where's the NDX one? You already know it's going to 85. Forget about those other numbers that I gave to you. It's headed to 8,500. You're at 57.72. So the question is going to be, when are you going to jump on that train out there? If we take a look at, I don't know, what else should we look at out here? Let's put another one up. Let's put the let's put the S&P 500, right? Let's just go ahead and do this, and then I'll search around and see what other charts. Oh, here, the S&P 500. Need you say more when you look at this chart out here? Do you even see a bearish reversal candle, a bearish candle anywhere? Do you see it on the monthly chart for the S&P 500? And the answer is, well, yeah, Steve, I see one, but it's way back yonder. Yonder, I guess there's a bearish engulfing back here in October of 2016. But the one that you'd really look at is probably back in July of 2016 out there. We hadn't seen any bears inside the S&P 500 on a monthly basis in a heck of a long time. So what does that communicate to you and I as far as what the S&P 500 wants to do? Is this a short? When you take a look at the longer-term chart out here for the S&P 500, and the answer is not just no. It is absolutely, positively not. I know you can say, how can you say that? I didn't. You said that. You looked at the chart. You looked at what this is communicating to us. You said there are no bears around here, not even after last month's move down inside the NDX and the composite out here. And the S&P 500 wants to continue, will continue moving higher. Janet Yellen, Schmellen, Donald Trump or Donald Jr. and, Russia this, Russia, Marsha, right? It doesn't matter. There is just simply gobs of liquidity in the marketplace and lots of buyers out there. And it doesn't matter if the Fed is going to reduce. The Fed is going to reduce their balance sheet. Do you really think that matters? Why? Why have you bought into that? Where is the majority, 75% of the money that the Fed, why do you think there's no inflation? It hasn't gone anywhere. It's on the bank's balance sheet. It's just going back and forth. It's a shell game. Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Look, you can do this at home, too. You can just simply go to your internet, search engine that you use out here, and you can type in something like, well, first, this comes from the St. Louis Fed, so you could type in Federal Reserve Bank of St. Louis, and what you really are looking for is the excess reserves of depository institutions. This is what they put together. Now, just to give you an idea, you're watching us on Tiger TV, you're seeing this here, and everybody talks about how the Fed's balance sheet has grown, right? Which it has. But if the question is, and I used to ask myself this question, why aren't we seeing inflation out here? If all this money is being printed, why aren't we seeing it out here? Well, we're not seeing it because it hasn't gone anywhere. It's gone from the central bank to the depository institution. The majority of it. All of it? No. Some of it's gone, into the pocketbooks of somebody, but not me. But look at where this thing built up to 2.8, 2.7 trillion back in August of 2014. Right now, we're somewhere in the 2.1, 2.2 trillion of the 3.5 trillion, right? I said like 70% or so. That is sitting there as excess reserves that the banks just simply shift back and forth. They get interest. Folks, so if the Fed reduces their balance sheet, is it really going to be a big deal out there? I know that CNBC and Bloomberg and all the Wall Street Journal, they make a big deal of it. That's how they sell papers, and they keep you tuned in, and they get you all scared. Or they try to get you all scared, right? Like you need them. You don't need them. Just go look for yourself to figure out where the money is, and then you're not going to have to be too worried. And now, they did say, right, they did get approval to start paying out larger dividends inside these banks out here. So, okay, maybe we start to see inflation start to move, but it's got to get out of this excess reserve area. And if it doesn't, it's just it's a shell game. Now, speaking of shell, though I don't know where I came up with that, but somebody, Danny maybe, wanted to look at bonds out here. Now, this is an interesting and difficult call for me when I take a look at bonds. What to do. It was getting easier, and I was looking for bonds to either move sideways or pull just a little bit further lower. See, if we take a look at that price oscillator, how close we are to the zero line, and it's at that zero line where we really garner information out there. But that hasn't happened. We saw a couple days ago where we saw a Tom DeMark 9 setup count occur, and that was inside of bar number 6 out here. No, it wasn't. It wasn't even a bar number 6 or bar number 5. It wasn't. Danny, with the yen doing what it's doing, what bonds should do is they should continue to bounce. And what I would watch for is I'd watch Stevie's red line. Now, right now, that's priced at 153.74 if you're watching us on Tiger TV. If price is able to overtake the red line, I would have no other choice than to say we're back to bullish inside of T-bond futures out here. Right now, it's neutral. It's a flip of the coin. It's really a counter trend rally to 153.7. You can see that happening for sure, especially while the yen is doing what it's doing out there. So would I be short bonds right now? Absolutely not. I would not. I'd have to see some type of rejection in the yen to maybe get on that train out here. So I think continued bounce, and maybe that was the bottom a couple of days ago inside of T-bond futures, short-term bottom inside of T-bond futures. Well, folks, been great to be with you. Stay tuned. Your favorite polar bear, my favorite polar bear, David White, is up next, and Tom O'Brien from 3 to 5. But most importantly, because this is Wednesday, you've got to get over to the homepage at TFNN.com. You must. I don't ask you to do things too often, but you must sign up for John Logan's workshop. You want to go ahead and gain access to those profiles. You want to gain access to, an extraordinary set of tools. Like I say, I'd never ask you to do something I don't. I use them every day. Why don't you? Have a great Wednesday, folks. We'll see you on Terrific Thursday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.